Welcome back, everybody, to another episode of FinTech Fridays. I am joined today by the Chief Client Officer of Gateless, David Fulford. David, welcome back to, welcome to the podcast. We tried to do this once before and had some tech difficulties, but it's great to see you.
Yeah, absolutely. Thanks for having me.
So I talk about, I talk to the audience a lot about me having the opportunity to meet and learn about cool people, cool products, cool companies, and I think we're going to check the box on all three of those today.
I think so. I think so.
I hope so. But I'd like to start with you, David, and your background, and then kind of how you got to Gateless, and then we'll go into what Gateless is and how it helps lenders. So just share with us your background and kind of what led you to Gateless.
Sure. Yeah, absolutely. Well, I'll start with the very last hop because I always like to joke with people, especially people who don't know the industry that well. When I took the new job at Gateless, I told everyone, I said, hey, look, I basically went from the most secure job in the world running things at Freddie Mac to the least secure job running things at a startup.
Yeah.
But working at Freddie Mac just exposed what the opportunity was in the fintech space, like to do something truly innovative, which I know we'll get into in a little bit.
Yeah.
But my background's been mortgage tech for my career. During college, I did an internship with my uncle's software development company, which happened to be in real estate software, and just got into software development. It wasn't what I was going to school for, wasn't what I was planning on doing. And that was in 95, 96. And, at the time, they were picking up developers off the street to try to give them good jobs because there just weren't that many out there.
Right.
And I had an opportunity to do some technical consulting, and it just happened to be with a company that was in mortgage technology. And I've worked for them for 3 years or 2.5. We were being acquired by Microsoft when I started.
Wow.
They were going to create this company called Microsoft Home Advisor.
I remember that.
And then the bubble burst, and it was the very first business. They're like, this is not core business. We're out of here. So over the next 2 years, we were bought and sold 2 times. And it was just a lot of starting and stopping. So I got a little exposed to the industry, but I didn't really get to sink my teeth into it because we were constantly trying to figure out like what the next move was.
Yeah.
But I lived in Jacksonville, Florida. And the next job I ended up taking just happened to be at Chase.
There you go.
And it was in their mortgage department. And so I worked at Chase for 11 years doing mortgage tech, like LOS rollouts. Essentially, we had just acquired a technology or contracted with a technology that there was a company called Dorado, if you remember back in the day, that had an LOS. Channel Master, I believe, is what they called the LOS. Chase had just acquired it. And we're over the next 4 years, we're going to roll it across each of their like 5 channels of business at the time. And so I was just a developer, and then they reached out and asked if I wanted to be a technology project manager for the initiative. And it was the first time I really understood what an LOS was. The very first thing, funny enough, that we got into was like, hey, they explained, hey, this is what AUS is. We're implementing this thing called DU and LPA, and it's going to automate so much of what we do already. And so that was my first real initiation into the mortgage tech. But anyway, worked at Chase for 11 years, worked my way up into some senior leadership roles, doing different things on vendor management, technology management. Then I went to Black Knight and ran delivery services for a company that was called Really C at the time. Oh, yeah. It was a subsidiary. Now it's like fully into Black Knight, and they call it their exchange.
Yeah.
Did that for 4 years. And then Rick Lang, who I worked with at Chase, reached out. He had just started Freddie Mac. And at the time, Freddie had brought in quite a few ex-Chase people. They brought in Dave Lohman.
Oh, yeah. To run. I worked for Dave Lohman back in the day.
Oh, did you really?
I did, yeah.
Yeah. Dave's one of my favorite people. He was an awesome leader at Chase. He was an even more awesome leader at Freddie, just because it was a more impactful role that he had to have there.
Yeah.
So he brought in Andy Higginbotham. Andy reached out to Rick.
I worked with Andy as well.
Oh, did you? So I had worked with Andy at Chase and at Black Knight. I'd worked with Rick and Dave at Chase. And then, so he reached out and said, hey, you want to come run single family client delivery essentially for Freddie Mac? And I was like, you want me to come work at a GSE? Like, that doesn't sound fun at all. But then he just walked me through what Dave had been doing. And at the time, Don Layton came in, and Don was the best CEO I've ever worked for. He was unbelievable. So, Rick gave me the rundown on what they were doing, and it sounded really interesting. And it was the best move I'd ever made because it exposed me to the whole industry. I got to talk to every customer, every technology vendor. They're knocking at your door wanting to do business with you, which is not normally, there's only a few places where you get to have that kind of luxury. So then I ran single family client integrations, client strategy and integration for 6 years. And during that time, I actually loved it. I loved the time there and still miss those guys over there. But you could just see that there were limits to what the GSEs could do, no matter how innovative the leadership was.
Yep.
And of course, Rick and I were both talking to all the tech vendors out there. We had developed a really good relationship with some of the leadership at Guaranteed Rate at the time. And at the time, there was a group of leaders at Guaranteed Rate that were going to be creating a separate company called Gateless.
Right.
And so they had reached out to Rick and reached out to me about potentially doing something over there. And, I had a lot of opportunities to get into the fintech space in different ways. But what attracted me the most is that they already had the built-in development partner with Guaranteed Rate, which means everything we build, we can test at scale, we can work at scale. And that's a big deal. As you know, being on the fintech side, getting a customer just to sit there and incubate stuff with you is not the easiest thing.
That's right.
So about 2.5 years ago, I joined and am the chief client officer there at Gateless. So that's my background. So 25 years now of mortgage tech, which doesn't seem possible, but it is.
I got you beat by a few years. I love the story, and I love the trajectory, especially for where you're at today and who you guys are serving today. Both you and Rick and Katie, the team has a very unique history and perspective and experience that is very, very helpful in this space, especially delivering a new platform, a new tool, a new technology to a client and a lender. So awesome. I love it. Check the box on the cool people part.
All right. Awesome. Great.
Let's poke at what Gateless does, right? Let's start there and kind of peel back the onion on what Gateless does and how you all help lenders in their business.
Absolutely. So to just go back one step into the Freddie Mac space, because it kind of leads into what we were doing here. At the time that Rick and I were both at Freddie Mac, we were very focused on rolling out LPA, getting more usage. DU was dominant in the industry at the time. Yeah. And both Freddie and Fannie had all of the rep and warrant offerings across income and asset and things that just weren't being heavily utilized.
Right.
And so for the first 3 years we were there, that was all we focused on, was trying to get customers to use something that gave them guaranteed rep and warrant relief. It just seemed like you got to do this. And the adoption challenges were surprising at how hard it was just to get the lenders to do something that was only a couple different steps. But what we realized is that you really need to do all the steps for them. If you're just going to add 1 or 2 steps to something they're already doing, and you're not eliminating any steps, obviously, that like automatically, the adoption's a challenge. And we knew that there was opportunities to just create kind of a turnkey solution where you plug into something and it does everything that you need to do to take advantage of these different offerings, and just to take advantage of some of the technology and automation that was already out there, but that wasn't being heavily leveraged.
Right.
So at Gateless, the product, our flagship product, is called Smart Underwrite. And at its core, its intention is to drive intelligent automation to the beginning of a lender's origination process in a way that truly eliminates significant portions of what a processor and underwriter have to do on a loan. To the tune right now, we have 5% of the loans that we run on in production. We can actually get all the way to an initial underwrite approval without any human touching anything, as long as the borrowers provide documentation or opt into source data.
Right.
But we had to do that in a way that truly replicates the steps of what a processor and underwriter does. It couldn't be a report that they look at and then translate and figure out what they need to do. It needed to set the loan up with all the appropriate conditions tied to the investor, It needed to create the borrower task and make sure that you're asking the borrower for the accurate things up front. And then as the documents are collected, we needed to do all the calculations and data integrity checks and everything that processors and underwriters do, or as much as we could.
Yep.
So that when that underwriter or processor does pick up that file, if 100% of it's not done, 80% of it's done. And they can just really get into the exception-based component of it. Right. So Smart Underwrite, what it does is as soon as you run our service, and you can determine when you run our service. Most of our customers run us at the beginning of the loan creation through clear to close.
Yep.
Because we are going to give you the borrower tasks from the very beginning, even without AUS findings, which is a little bit unique in the competitor space because we codified the GSE guides.
Yeah.
We don't require the AUS findings to tell you what you need to do on the loan or to calculate income, assets, credit, et cetera. But once you do run AUS, we reconcile. If you get rep and warrant relief, we account for it and things of that sort. But the bottom line is we make sure you're asking the borrower for the right things up front. And in order to do that, you really need to run us early.
Yeah.
So the most customers run us at the beginning and stop running us at the end of their underwriting process. And along the way, we're listening into material data changes. And as those material data changes occur, as documents get uploaded, as new data becomes available, we will go in and refresh the conditions and tasks, try to clear as much as we can. And then again, the underwriter and or processor should just be working on the exceptions.
Right.
Right now, so the way that we kind of talk about our product and our conditions and like the ROI and how you can really tie it into everything, because it's a challenge for lenders to wrap their minds around just how much we're automating and just what it really means to them from an ROI standpoint. We have an ROI calculator that gives you the most conservative estimate on what ROI would be, because it doesn't factor in some of the borrower, experience enhancements and just the fact that you're getting risk reduction, which risk reduction, other than eliminating whatever buybacks you got last year or some portion of them, it's tough to just put a dollar sign on how much risk reduction really does for you.
Right.
But the time savings, we can put ROI around that. So our conditions are set up in two different categories. One are data integrity conditions, meaning is all the right data there? Does it match the sources it's supposed to match? Is it in the right format that's supposed to be in? These are all the requirements that are baked into the GSE guide that are not part of the AUS findings in any way. The underwriting conditions, so our other categories, underwriting conditions, these are traditional underwriting conditions. David makes so much from Gateless each month, and he's been employed for 2 years. Have you checked the W-2s and pay stubs for all that, or whatever source of documentation you have? Those are our underwriting conditions. If we look at our clear rates across both, right now, the average Smart Underwrite loan is clearing over 80% of the data integrity / processing conditions that are typically handled, and about 45% of the underwriting conditions that go into an initial underwrite decision. And I clarify that only because right now we're not doing anything in the insurance space. We're not doing anything in the title space. Yeah. And other than we do reconcile with AUS. So we're going to show you your AUS, your appraisal messages from the AUS findings, but we're not interrogating and clearing conditions for you in the collateral space.
Right.
So our focus is really to get an approval to your borrower so they can go shop with confidence against cash buyers out there.
Yep.
Credit, income, and asset have to all be done. So we really focus into that space. We are going to be moving back end of the origination process later next year, but there's still so much. There's so much opportunity in the credit, income, asset space. So net, we are saving every activity that we touch that a processor or underwriter was doing before. Our customers are seeing about a 74% reduction in time to perform those activities. And that's combining how often we do it completely for them versus how much we do part of it and they have to take up the remainder.
Right.
That translates, depending on how much you're paying your processors and underwriters, that translates to somewhere between $200 and $300 of cost savings per closed loan. And again, doesn't factor in risk reduction, doesn't factor in a better borrower experience, better pull through you might get. When the refis start to come back, and you're starting to see them pop up a little bit, a refi boom is not going to happen anytime soon.
It'll be a boomlet.
Yeah, exactly. When refis do come back, Then you have the add, and this is something we can put dollars around, the cost of funds to carry across the lock periods and such. And because with refis, you can close as soon as the lender's ready. For purchases, no matter if you're ready the second day, you can't close the loan any faster. So you're still carrying those costs.
Right.
So there's a huge cost savings on the refi space when that comes. But we've been obviously focused on purchase because that's where the market's at right now.
So,
because I know I gave you a lot.
No, that's perfect. I've got a couple questions and a couple comments. The comments first, when you talk about the dollar savings per loan, feels really conservative to me. So, and I know that's on purpose.
It is conservative. I mean, it is conservative. We have a couple of, we have one customer now that has, I'll say, automated the best around the product, because our customers, there's a lot of different levels of sophistication on how automated you want to get.
Sure.
One customer has rolled out a product that heavily leverages our services, and they know that that product right now is saving them somewhere between $600 to $900.
Yeah.
We're a big part of that. It's hard to say exactly how much because they've built some workflow around it and they're doing some people management things that have helped, but they know that it's saving them $600 to $900, and we're a portion of that. So but we'd rather go in conservative.
Oh yeah.
You know, under promise and over deliver, especially coming from the GSE side and just seeing all the different fintechs come through and like saying what these things can do, and then they don't deliver, and you hear the customers. You know, I've been on the customer side working at Chase, and how frustrated we've been with vendors in the past. So we really go, I think, the extra step to be very transparent about what we think it can do.
So my questions are really around the I'll call it the top of the funnel, you know, really the point of sale where the first interaction with the consumer is occurring. Obviously with the loan officer, how I'm imagining that the lender's point of sale is the starting point typically for gathering that first bits of data, right? Typically.
Correct.
And so in the tech stack, you guys are probably the first intake out of point of sale.
Ideally.
Ideally. Yeah.
Ideally. So we built the service to be true middleware, meaning we plug into your point of sale, to your LOS. If you have a workflow engine, we could plug into your workflow engine. And we create the conditions and tasks where you already work them today, so that there's no new system for the customer to learn. We do provide a separate UI with the product, which is a really elegant, modern view of all the work we're doing. But it's not really intended to be a workflow tool yet. It's just intended for implementation support. When you do have production support issues and you want to get a little bit deeper view into the automation or calculations, things like that, you can go a little deeper in the separate UI. But it's intended to keep you in the systems you're used to. Yeah. Ideally, the second that the borrower commits their initial loan data and tells you the basic stuff about who they are and their property that they're going after, or if they don't have a property at all, you're calling our service to get our borrower task. So you're asking them for the right things up front. Right. We are working with, for today's purpose, I'll just say 2 of the 3 biggest point of sale vendors out there we've been talking with for a while now. Yeah. I do expect that the biggest one we're going to be implemented with sometime this coming year, but we've already fully implemented with our first dev partner, which was Guaranteed Rate. They have a custom point of sale, and we're fully integrated with that. And it's a very automated solution where the second that borrower basically hits, here's who I am, it calls our service even before AUS findings and ensures that they're asking for the right things. Yeah. Because of the fact that they've been a development partner for so long, we've given them some additional capabilities that we would gladly give other customers if they wanted to do it. Right. But we actually, the second that the borrower completes their point of sale initial experience, we go out and run a dual AUS transaction, come back with waterfall logic on which AUS you should initially set the loan up with. Yeah. And then the first set of tasks and conditions that we provide are not only our codification of the guide, but whatever additional components that may have come back from AUS. But ideally, you're running us at the very beginning. Otherwise, you'd be losing out on some of the capability.
So I'm gonna make a guess here. I think it's semi-educated. Guaranteed Rate, obviously one of the best brands in mortgage, a great company, great people, great leadership. They at the tail end of 2023, right? They heavily promoted this same day or one day.
Yes. Yep.
And now that you've described what you described, I'm pretty sure you guys are a key component of that.
We're a big part of it. We're a big part of it. And again, to be fair to what they've done, they've built they have really good technology already. And so we just serve up things in real-time fashion that they wouldn't be able to serve up without Smart Underwrite running.
Right.
But it drives significant time savings. For us. And so it's a day mortgage. Yeah. And then they rolled out another product that was like same day. There's two different products. I can't remember the other name of it, but both of them heavily leverage the tech of Smart Underwrite to drive when those things are available, how they know if a borrower is actually going to be qualified for same day ties into our automation of that credit, income, and asset.
Yeah, no, I think I follow a bunch of their production people on their different social channels, and they really do a nice job promoting the product. But it's not like they're selling a product. They're really describing to their broader consumers this differentiated experience. And you said early on in this conversation, one of the key benefits of the Gateless experience is confidence and certainty all the way up the funnel for that borrower who we're all ultimately serving. It's the borrower really. And
absolutely.
I love to this is why these conversations are so cool for me, because I'm connecting the dots on what I've seen from a marketplace perspective with Guaranteed Rate, and now learning a little bit about some of the components that are behind that promise they're making, which is pretty cool.
Absolutely. Yeah. Your podcast is a good opportunity. I talked about working at the GSEs, you get exposure to tech and lender across the board.
Yeah.
But doing a series of podcasts like this, I'm sure you get a lot of really good opportunities to understand too. And it helps you I'm sure it helps with your company too, just to think about the bigger picture, where there's market opportunity, where there can be different products or enhancements to products.
Yeah. When I started doing this, which has been 2 years, it was as a favor for a friend who had built a platform and needed some content. And that's how FinTech Fridays became the title, because his content was Monday through Friday. I got the last day of the week. So
it worked out perfect. And then, to your point, I look forward to these conversations because I'm learning right along with the audience. And it helps me think about where FinLocker fits, in the ecosystem. And it a lot of times it informs ideas that we may kind of take back and work on ourselves. So it's been a lot of fun, and it's been a great learning experience. I have one last question. This should be a softball for you, but so really understand what the product's doing today. What, as we look into 2024, any sneak peek into the roadmap that you guys are working on that the market should be aware of? Yeah, no, and we've been pretty public with it in other settings too. So right now we're running on conventional conforming loans.
Yeah.
Which up until a year ago was as high as like 70% of our customers' pipeline.
Yep.
FHA and VA have taken a bigger role with the rates where they are, and even jumbo to some extent. So our primary focus is by the end of next year, we at least have 2 additional products ready to go. It's definitely going to be FHA and either jumbo or FHA and VA. It just depends which. We try to base our roadmap off of what our current customers' needs are as much as possible. Obviously, there are market trends that we have to factor into.
Yep.
But I'm a strong believer in when your customers tell you they want something and you deliver it for them, that customer is going to be a customer for a long time. When they feel like they're getting secondhand picked based on what new customers or the industry is asking for, it's not a great customer experience. So we're definitely going to be getting into outside the conventional conforming space. And then we just rolled out the ability to calculate and auto clear off of self-employment Schedule C.
Okay.
And we'll be picking off a couple of additional self-employment capabilities in the first half of next year. And really by the middle of next year, we're going to try to be as deep as we want to go on the conventional conforming space as far as credit, income, and asset goes. We're already clearing a lot, as I mentioned earlier, but there is a tail on each of those things that we can take some of it off. There's going to be a tail on some of these things. A good example is bank statements. We have coverage right now. We're about to have coverage across 85% of the financial transactions we see in our loans.
Yeah.
That 15% is made up of thousands of different small regional banks and credit unions and things of that sort. And there's just always going to be that tail.
Yep.
But so the first half of the year is going to be really focused on wrapping up some of the stuff we've been doing in the credit, income, and asset space, especially around self-employment. Second half of the year, we'll be expanding into FHA in either jumbo or V. And then the last thing I'll say on that front is we have had a number of conversations with a couple of really good tech vendors in the collateral space that we're getting a little deeper into how we might plug in their solution to have a combined capability so that you do have the collateral underwriting and automation tied into the product.
Love it. Yeah, a lot of great things going on. I'm really enjoying what I've known Rick for a long time, and so I've been following Gateless since he got over there. It's been great to meet you and Katie, and going to be cheering you guys on for sure here from this little podcast. So
I appreciate it.
Thank you so much, David, for coming on today.
Yeah, absolutely. Thanks for having me again, and enjoy your new year.
Thank you. Well, everybody, thank you so much for tuning in. Come back next Friday, or actually 2 Fridays from now, for the next episode of FinTech Fridays.